Fed and FOMO. FOMO, fear of missing out. And now we've had 7 weeks in a row of positive returns, really driven by the Fed and their actions. We talked a lot, Brian, about what the Federal Reserve was going to do and that they were probably at the end of their rate hiking schedule. And, of course, then there's the pivot, which you and I talked about a lot. That sure looks like that's going to happen in 2024.
It does, and it's more a question of when as opposed to whether, which is kind of a nice position to be in. Ever since they started hiking back in March of 2022, they were moving at a fast and furious pace. Back in July, we said that that was probably the last hike by the Fed, and really over the last couple of weeks, Fed officials have come out of the woodwork to reaffirm that they were on pause. And this past week, Chair Powell, he effectively said that they are on pause, and they're actually beginning to talk about what would the conditions be for them to actually start cutting rates. So it's rather interesting how they were trying to keep it a bit of a not well-kept secret that they were on pause, and now we're actually thinking about within the next few months, maybe next 6 months, are they going to start cutting rates?
And if they cut rates, of course, that affects everything from stocks and bonds to mortgage rates and credit card rates. This surely should get everyone's attention. So let's talk a little bit about what goes into that. When the Fed starts to cut rates, they're going to look at a number of factors. We received some good factors this week, lower inflation and retail sales being part of that.
That's right. And it's actually something that I think has had the Fed in a bit of a pickle as far as why are we seeing such strong consumer spending despite what the Fed has been doing. But thankfully, what's most relevant is the inflation number, because really they can bring down inflation without hamstringing the economy. And I think that's a key thing. It's something that early on in the hiking cycle, Chair Powell held out as a remote possibility, this soft landing scenario, which is basically what happened back in 1994. It's really the only time in the Fed's history that they were able to hike without causing a recession. They were able to bring inflation lower without having the unemployment rate rise too much. So he kind of held it out there as this remote possibility, and that possibility seems to maybe becoming a reality.
Well, we'll have to see. We'll see if they do thread the needle, as they like to say, because it is a rare occurrence that they actually slow the economy down and not cause a recession. So let's, folks, I said we weren't going to have a recession in 2023 because we had positive GDP numbers. That doesn't mean that we can't see a slowing in 2024 or 2025, because if you look at as many times as they have done it, I don't remember the number, but 15 of the 16 times they've been wrong. So let's take a look and see if they can get to that soft landing, but it certainly seems to be an overcrowded trade.
It does, and that's one of the things that has us cautious on our investment committee is when you look at what the market is pricing in, and you can look at this through the federal funds futures contracts through the Chicago Mercantile Exchange. I think they're just now known as CME Group, but they can actually say that the market is pricing in 6 rate cuts in 2024. The Fed, with their summary of economic projections, they said, hold on, we're only planning on like 3. Now, who's going to be right? Honestly, I'd rather side with the Fed on this as opposed to the market as far as how many cuts are likely coming in 2024.
And let's talk about the bond market for just a second. Not that long ago, we were at 4.9 plus on the 10-year Treasury, closed Friday at 3.9%. That is an enormous move.
That is. And really, if you think about the bond markets, it was supposed to be such a boring area to be in for most people's portfolios. The last 2 years, it's been anything but boring. Now that yields are higher, we've actually seen some of that rally in the prices. Going forward, we don't expect that we'll see those continued rallies. So hopefully you're positioned properly as far as to ride those yields lower.